So in our first lesson, we are going to look at the structure of the tax audit exam. The structure of the tax audit exam. So what goes into the structure of the tax audit exam before you actually sit for the paper? Now, this structure, you have to look at it carefully so that you can revise alongside. So the structure begins with the introduction to audit and tax audit, okay? We have to know the introduction to audit and tax audit, okay? Introduction to audit and tax audit. And there are a number of components you need to know here. The second thing that you need to know, I'm breaking it into 5 questions. Let's say if this is question 1, let's say this is question 2. So after you look at the introduction to audit and tax audit, the next phase is to look at the legal, ethical, and administrative framework. So legal, ethical, and admin framework of tax audit, okay? And this also is very important because there are a number of components that go here. Then the third part, which I would want you to know, is to know the tax audit process, which will basically be made up of the pre-audit research, okay? So this part, pre-audit research, investigation, or let's say audit evidence gathering, so, or field work. So evidence gathering, then working paper documentation, and finally closure, or let's say reporting, okay? These are the 4 stages of a tax audit. Now, let's just say this is another area you need to know. Then finally, the 4th area should be tax investigations, okay? The 4th area should be tax investigations. These are actually all the areas. Then the 5th area, I should name it miscellaneous, right? Why am I naming it miscellaneous areas? Because these areas may be a mix of either of these, which may either come as calculations, mostly mixed with indirect methods of a tax audit, okay? So this one mostly has indirect methods where you'll be expected to use things like control accounts, or to use some particular VAT methodologies, okay? VAT methodologies and other things to actually spice up your exam. So these are the areas that you have to actually look at. And I'm just going to give you a breakdown of each of the areas so that you know how to study for your exam on Monday. So let's first start with the first part, which is the introduction to audit and tax audit, which I may say that may be your question 1. So intro to audit and tax audit. Intro to audit and tax audit. So what should be the focus here? So here is everything about audit. So first of all, you need to know the definition of audit. Okay, so the definition of audit. Okay, so here, when I say definition of audit, you need to know what an audit actually is, a normal audit or statutory audit. You need to know about internal audit. You need to also know about tax audit or revenue audit, okay? So these are the things you should know. So definition of audit, yes. Then within the definition of audit, you also need to know the characteristics or the features. So you need to know the features. You also need to know differences, okay? Differences. Okay, so these are the things that you have to actually note between these types of audits. Then you also need to know the different types of audits that there are apart from what? A tax audit. From there, the key focus then will be on tax audits, okay? Mostly the okay, I forgot one thing, which is the objectives of these kinds of audits, right? But the key theme is tax audit, especially the objectives and then the things tax audit seeks to achieve. This one mostly appears in most questions. Then from there, we need to know how to measure tax audit objectives, okay? How to measure tax audit objectives. So how do you measure tax audit objectives? Very important. Okay, so are you using output measures or you are using quality measures, okay? So there are a lot of measures that we use to measure whether tax audit objectives have been achieved. So these are the things that you have to actually focus on most of the time at this level. Then from there, you look at the various types or the location of tax audits, okay? Various types or location of tax audits. So these are the things that you have to actually focus on. So we have two types, which is carried out at the office of the authority or the tax audit office, which is the desk audit. And when we go to the client or the taxpayer's premises, which we call a field audit, okay? You have a schedule. Not collect our thinking. Okay, so that is how it goes. Then we look at the approaches for carrying out a field audit. So the approaches for carrying out an audit. Okay, so there are two main approaches you use for carrying out an audit. Carrying out an audit may be an emergency audit, okay, which is mostly unplanned. You just barge into the taxpayer, especially when there are some sort of third-party information or whistleblowing. You don't notify the tax audit. Then we have a planned audit, okay, which is when you notify the taxpayer that you are going to audit him. And this is the normal approach we usually take. So these are the areas that you need to master, okay? Then you can come to look at the differences, okay? The differences between tax audits and investigation, as well as the stakeholders in an audit, the stakeholders in a tax audit. So these are the areas that you need to know for the first part. So questions can come here as theory or as practical. Here is mostly theoretical, okay? It's a knowledge-based kind of question, okay? So this is what I expect you to look out for because these kind of questions are mostly theoretical. Now let's go to the second part, which is the legal, ethical, and administrative framework, okay? Which is the next part, 2. The legal, ethical, and administrative framework. So what are we expected to know here? What are we expected to know here for our tax audit exam? Now, the first thing I would want you to know is the legal framework. Okay, so the legal framework embeds all the laws, okay, and the various parts of the legislation that enable a tax audit. So first of all, the most common area that comes to your exam is the elements of the legal framework. So apart from looking at the elements of the legal framework, each of the elements of the legal framework actually may come on their own. So you need to know about tax returns, okay? Tax returns. You need to know about assessments, okay? These are the common things that are free bonto for you, and also need to know from section 33 through to 36 of the Revenue Administration Act, okay? So here you have to know the selection of a taxpayer for an audit, or when the Commissioner General may call for a re-audit of somebody's returns, or may re-perform an audit of a taxpayer, which mostly goes with selection under section 36. Okay, so this is the part of the law that mandates the revenue authorities to carry out or perform a tax audit. Okay, then from there, you look at access to books and records, access to your premises, which can be found within this, and notice to obtain information from the taxpayer. Okay, so these are areas that specifically relate to a tax audit. Okay, notice to obtain information. So that is the area that mostly relates to what the legal framework. But this is not all. Anything to do with taxes are also important, especially this is the administrative parts that may help them in the legal framework. Also sanctions, penalties, and interest. And with sanctions, penalties, and interest, most of the time it doesn't feature because you do it at the advanced level and the advanced tax practice. But the one which I would be mostly concerned is the underestimation of tax payable. Okay, so the underestimation of tax payable, this may feature as part of your exam where somebody has underestimated his tax payable and you have to compute the penalty. That's the so far the only one, or maybe not filing returns on the due date. Okay, not filing returns on the due date. 10 CDs for each day, 500 CDs plus 10 CD for each day of default. That is maybe common, but it's rare. You don't usually see this. But another area which I want you to look out for is tax refunds, okay? Because of a refund audit. So look at section 65 and 66 of the Revenue Administration Act. So these are the areas that I will want you to look at, though there are more, but these are common areas which you should be expecting. So refunds are here, as well as a VAT refund under the VAT Act. Okay, when you want a refund for VAT, which can be found under section, I think, section 50. Yes, I think that is section 50. Okay, so these are the areas that you should expect under the legal framework. Now, also, there's one other aspect, sorry, which can be captured under the ethical framework, but it's still in the law. So let's still put it under the legal framework, which is official secrecy. Okay. So when you come across any taxpayer information, you have to keep it secret. And this official secrecy is basically confidentiality, which can be found under Section 7 of the Revenue Administration Act. Okay, so that is official secrecy. Then I think Section 4 and 5 of the Revenue Administration Act, which also talks about assistance of the authority. Okay, so where you have to bring experts to assist GRA to perform their functions in an audit, then that may also be considered. Then you can also, some areas maybe I would have put it under the ethical framework, but I believe because they're in the law, let's just consider them as part of the legal and administrative framework. Okay, the legal and administrative framework. So maintaining documents, every taxpayer has to maintain documents so that we can determine whether their records are accurate. Okay, so maintaining documents can be found under section 27. You need to know this by heart. And even within accounting, you need to know the types of documents that you are supposed to maintain straight from source document. Every business needs to maintain source documents, invoices, receipts, and it is through these source documents that they get entered into your books of prime entry. Then from your books of prime entry or your journals, it goes through to the ledger, okay? Goes through to the ledger, to the trial balance. The trial balance people usually do not consider, but from the ledger, it goes through to the financial statements, okay? Then from the financial statement, even within the ledger, there may be sub-ledgers, okay? So these are the things that you need to know. Are you getting it? But the legal rules are about maintaining documents, that every taxpayer should maintain documents for a specific period before he can destroy it. Usually 6 years or more, or from the relevant date, whichever is longer. So these are the areas you need to look out for the legal and administrative framework, as any question may pop up from these areas. So if you want to prepare, at least you have a week. You have a week to make sure you go through all these areas, and it is possible that you may find a question in this area. Now, every taxpayer actually has some roles he needs to play, right? First of all, you need to what? Be able to register with the authority. Also, so you need to register with the authority, and by registration, most common registration that we need to know is income tax registration, where the person has to register for income tax, which mostly they will not worry you in the exam. But what they are going to worry you with is VAT registration, because that is very important for an audit. Indirect taxes constitute the larger chunk of government revenue, and hence indirect taxes become very important in an audit, as students are more well versed in income taxes than indirect taxes. So VAT registration can be found from Section 6 through to Section 19 of the VAT Act. These are the areas that most of the time you are expected to look out for, okay, when it comes to registration. Now, failure to register constitutes a risk. Anytime these roles the taxpayer plays doesn't go well, it constitutes a risk. Now, once you have been able to register, remember you have to file returns. And filing comes with a filing risk. That is why I told you to look at tax returns from up there, right? Here we can see tax returns and assessment, because through filing, you have to end up declaring, right? And it is the returns that you declare. Now, when you declare, it may be an under declaration, or if you don't declare at all these are risks. If you over declaration, is still a risk because you're expected to pay. Okay, so the final part is the payment, right? So you register by filing, you declare, then you pay. Anything that goes on wrong with this, with the taxpayer, constitutes a taxpayer risk. Now, how does this relate to the law? There are parts about when to pay, even when to file returns, when to pay your taxes, right? And here, when a calculation question will come, maybe a quarterly installment, tax installment, okay, where the person has to be paying quarterly installment. Okay, I think it has appeared in the tax audit exam before, where you have to compute the quarterly installment payment. So the legal framework is so broad, and if we are going to dive into the legal framework, we are going to cover so much, okay? But so far, these are the areas that I want you to look out for from now. Okay, you at least capture, they are not so much in the law, just capture them, just have a summary version of these areas, and I think you'll be fine. Now, that is about the legal framework. Let's go to the ethical framework. Now, with the ethical framework, it's also broad, but let me keep it to a minimum. First of all, you need to know the role of a tax auditor. Okay, so the role of the auditor itself under the Companies Act, okay? But most of the time, I think your examiner wouldn't really be concerned about this one, but he will be concerned about the role of the tax auditor. Okay, so with the tax auditor, we need to know the role of the tax auditor. And the role of the tax auditor means look at the characteristics of a tax auditor, okay? The characteristics of the tax auditor, the duties of a tax auditor under the law. Okay, he must be able to receive, he must be able to carry out his duties, get access, duties and rights, and also all these things, you have to know them under the law. Access to your records, access to your premises, access to all documents. Okay, so this one, you remember I was telling you to look at section 33 through to section 36. It's still part, though it's ethic, is around ethics, it's still in the legal framework. Then from there, we have to know the code of ethics, okay? The code of ethics here, you are looking at the ethical principles that every accountant or tax auditor should be following, okay? So we have the fundamental principles, so we can use PICO, which is professional behavior, integrity, confidentiality, competence, and objectivity. Then the threats to this objectivity, the factors that threaten people to not comply with these, okay? And those are the ethical threats. So we can use massive, okay? Can use massive, which is a management threat where the tax auditor is seen to be acting as a manager for the taxpayer. It's against code of ethics, or advocacy, where you are seen to be promoting the taxpayer or his business or supporting him in some way. Then we have self-interest, for your own personal interest or some monetary involvement with the client or the taxpayer. We have self-review, where you check your own work. You are working with GRA. You are the one going to check the returns. You are the one same person preparing the returns. Then we have intimidation, where the taxpayer threatens you or gives you pressure, duress, and undue influence to influence you to do something which you are not ready to do, and familiarity, when you have close relationship or long business relationship or family ties with the taxpayer, that can also influence your ability not to comply with the code of ethical principles. Okay, then you can look at some consequences of unethical behavior. When you don't behave well, what are some of the consequences that may arise? All these things can come. Usually it's rare. I've seen it before. It has come before where this came as a case, but this has been quite long. But you still need to know these principles. Okay, now apart from this, one thing that is very important is that you also look at auditor's liability. Auditor's liability. Now, under auditor's liability, you need to know how the auditor will be sued, okay, if he doesn't do his work well or be for some particular reason, okay. So you need to know how the auditor will be sued, and this depends on the type of liability, right? So the auditor will be sued. Is it a criminal liability? Has the auditor connived with the taxpayer to do some criminal activity that um, makes the auditor sued? That is between the auditor and the state. So that's a criminal liability. Then maybe the auditor has a problem with the shareholders, or he didn't uphold his duty of care. So that is what we call a civil liability, okay? A civil liability. Then finally, you can also talk about liability of tort or negligence, which is the common one auditors are sued for, where the old three conditions are mostly met under negligence, okay? So there are three conditions where one, the auditor owed somebody a duty of care, the duty was breached, and as a result, the person suffered some damages or losses. So these are the things that you need to actually look out for. Then you also need to look at ways to restrict the auditor's liability, okay? Ways to restrict liability. These are very important. How do you ensure you are not being sued? You can perform your work well. You can issue a disclaimer. You can ensure or use good teams. You can discuss with the client where you have issues. You can even ensure proper quality control within your audit firm. Okay, sometimes tax audits are outsourced to audit firms. Within the audit firms, look at the kind of employees that you're actually using for the work. All these things have to be actually considered as a way to restrict tax auditors' liability. Then from there, I think you need to look at money laundering. Okay, money laundering. What is money laundering? That is concealing the source of dirty proceeds or washing dirty money clean. That is why the word laundering. Okay, so these are the things that you need to look out for. So when it comes to money laundering, it goes through three stages, which is placement, placing it in the financial system. It comes to layering, creating a layer of transactions or transaction trails. And finally, we have integration, when it is integrated into the financial system as new source of funds to do good projects. So apart from money laundering, the other aspect which you have to also consider is the use of an audit committee. The use of an audit committee. So these are the things that we expect you to look out for. Okay, so that is it. So the legal and ethical framework is very important. Okay, the legal framework and the ethical framework is also broad, but these are the key things that you need to know. Then we now move to the third part, and the third part has to do with the audit process. So tax audit goes through some stages. Tax audit goes through some stages. So stages in a tax audit. Okay, so we can say stages in a tax audit. Okay, so what are the stages of a tax audit? So there are four main stages of a tax audit. We could say it starts with pre-audit research. Okay, pre-audit research, that is researching or audit planning. Okay, planning your audit, which is all before the actual audit. And this usually takes the form of a desk audit. Okay, this is even a type of audit. It is done mostly at the premises of the authority of the tax or the tax audit firm. Then after you have been able to do all this research, the next thing is to visit the taxpayer. So we carry out field work or evidence gathering. Okay, this is where we try to gather evidence. Okay, field work or evidence gathering. And this is what constitutes about 60% of your exam. Okay, evidence gathering, the procedures. So when you go to the exam, you see conduct a procedure or prepare an audit program or an audit strategy document. Okay, audit strategy document or gather evidence. All these things are the common type of questions that you are going to get in your exam. This fieldwork constitutes the major chunk of your paper. Then the next stage is, remember that after you gather your evidence, how would we know you have actually gathered your evidence? They should be put in your working paper. So we have to know working paper documentation, which is the next stage. Then finally, after you have documented everything, it has been reviewed, you need to what? Close the audit. Okay, so audit closure and reporting. This is where we close the audit and we report. Okay, so this is the final stage of the audit. And even after this one comes the raising of assessments, because in the final tax audit comes an assessment. Okay, so we are going to look at the various areas in each stage and the likely questions that you should be looking at. You see, the syllabus is very broad, but when you don't have a definite structure, you end up being scared off the road. You'll be learning other things which you are not supposed to learn. So let's first look at the first stage, which is pre-audit research. Now with pre-audit research, it goes through some number of stages or audit planning. So the first type of question which can be asked is what? The objectives. What is audit planning? So the definition of audit planning, that is what is audit planning, and also the objectives of audit planning, or if not objectives, they are going to ask you why audit planning is important. So this is the first thing that they are going to ask you. Apart from that, they are going to ask you the stages in a pre-audit research. So sometimes if you don't see pre-audit research, you see pre-contact procedures. That is before you contact the taxpayer. What procedures are you doing? Okay, so be careful. You don't see pre-audit research, you're going to see pre-contact procedures. So the definition, the objectives, and the importance. Okay, so these are the things that you have to look out for. Just know them and you will be fine. So apart from the importance and objectives of pre-audit research or audit planning, okay, so if you don't see this, you are also going to see audit planning. What do you do? Now, the stages in this process is that, first of all, we must identify the taxpayer or select him for an audit. Okay, so another question that can be asked is selection of a taxpayer for an audit. How do you select a taxpayer for an audit? Remember that we made reference to Section 36 of the Revenue Administration Act in identifying a taxpayer for an audit. That's the first stage. Now, once the head of audit has identified which taxpayer, the next thing is that he's going to give you a case assignment. Okay, so this is where you receive your case assignment from your head of audit. Okay, so receiving your case assignment from your head of audit, it must meet some criteria. Okay, he will tell you some criteria you need to meet and maybe some deadline. Okay, some deadline for you submitting your case assignment before you actually go to the tax payers premises. Now from there, now that you have received the taxpayer's case, you have to collect background information. Okay, so this is where you collect background information, and collection of background information is actually knowledge about the client. Okay, so you can say knowledge about the client, so, or the taxpayer. You need to know the taxpayer in his industry, the type of work he does. So this is covered by the International Standard on Auditing 315. This is very important to your exam as it can appear multiple times. It has appeared almost every day. What kind of information do we need to gather about the taxpayer? What kind of business is he doing? All these things, you have to really, really know them. This stage covers a chunk, okay, of theory that you need to know. the actual practical side is mostly not around here. It's around the field work stage and maybe the reporting stage. But here is mostly theory and you need to know them by heart. So after you collect background information, it's actually for you to be able to what? Do a risk assessment. Okay. So all these things you are doing, collecting background information, which may include actually doing preliminary analytical reviews. Okay. So when you collect background information, you do what we call analytical procedures. And analytical procedures at your exam level, you need to know accounting ratios. So accounting ratios, you need to know procedures. Even after carrying out the ratio, what do you need to do? Very important. Analytical procedures, in simple terms, let me just say ratio analysis can be used at every stage of a tax audit. So you need to know them by heart, especially ratios that have to do with profitability, because tax depends on profit. So if you know profitability ratios and also liquidity, your ability to pay the tax. Also, because people will mostly be making profit based on their activity and how efficient they are in their operations, you need to also know about efficiency ratios. That is how you convert your raw materials into cash, how you pay suppliers, and how you also receive money from your customers. Then finally, your interest expense. Interest reduces profit. So we are interested in your gearing, how much debt you have in your capital structure. So all these things signify risk. Gearing signifies financial risk on your financial statements. Hence, it is important for a tax audit. So when we are assessing, when we are looking at collecting background materials, after knowing the kind of business you do, reviewing all that, analytical procedures or ratios and financial data analysis are very important. Okay. Now you need to know the risk assessment procedure. So usually I use ICPA. Okay, ICPA. So we must identify the risk. Okay, once we identify the risk, we categorize the risk into the various risks I was talking about, which is what? Failure to register or being registered wrongly, registration risk, filing risk when you don't file on time or late filing. We have declaration risk where you under declare, which is the most important to the taxpayer, the tax auditors. When you don't declare, that means you are not going to end up paying the right tax. Then payment risk. So after categorizing the risk, the next part is to what? Profile the risk, assigning risk scores, okay, and evaluation. Then you analyze the risk. Then finally, you assess the risk and respond to it. Okay, so assessment and response. So response actually has to do with the actual audit. The execution of the audit is your risk response, which will be done in the fieldwork stage. So usually you don't see people adding risk response to the risk assessment stage. Now, one thing about risk is that risk can be looked at from two perspectives, from the perspective of the tax administration and from the perspective of the taxpayer. Okay. Now, from the perspective of the tax administration, tax audit risk is of two types. It's either you are not keeping proper records, which is the risk of inaccurate records, okay? Because any risk that may occur may be that it's either coming from your record or it's coming from the misinterpretation of your tax law, okay? Or misrepresentation of the tax law. So if you don't maybe apply the tax laws well, you can have a risk in your tax returns or the tax information you are submitting, or you didn't have proper records. And proper records means that it is either you are facing some elements. So every risk that will be caused is due to three elements, okay? And these elements could be something inherent in your business, okay, which we call an inherent risk because it's attached to your business, usually because of size and nature, okay? So because of the size and nature of your business, there are some risks that are what? That are key or that are just attached to your business. For instance, if you're in an IT or telecom-based business, we know that it is fast-paced industry. So it's attached to the nature of the business. So this kind of businesses have their own risks that they come with, which are mostly related to business risks. So for instance, in the IT industry, you know that your inventory can easily go obsolete because new and new technologies are coming. This one, you can't do anything about it. That's what we call an inherent risk. Then because of this inherent risk, sometimes it is difficult to set controls. So we call them control risk. Okay, so if you have inaccurate records, these two risks are the likely cause of these inaccurate records, and these two risks together are known as risk of material misstatement. Okay, they cause material misstatement in your records or your financial statements, and that is why the tax auditor will be concerned about this risk of inaccurate records. The final risk is actually the fault of the tax auditor, which we call the detection risk. Okay, these are just elements. These are the things that actually cause the risk of inaccurate records. Okay, but the ability of the tax auditor to detect these risks, this risk of material misstatement, is what we call the detection risk. So it's either the tax auditor is not using the right procedures, okay, and because of that, he couldn't identify the risk, or he didn't use the right samples, because you can't test 100%. You need to actually do sampling. Okay, so basically, audit risk is about this. In your tax audit exam, these are the things audit risk will cover, and you need to know it, and know it very well. So these are the key areas, but still under pre-audit research, there's one final area, which is finally what? Determining the depth of the audit. Okay, so we've seen risk assessment, then the depth of audits. How deep are you going to audit? So this is what we call the audit strategy. Okay, you need to know what constitutes audit strategy, factors to consider when developing your audit strategy, and finally documenting conclusions. So document conclusions is actually your audit plan. So we need to know what an audit plan is. Okay, especially what is an audit plan, or an audit planning memorandum, and an audit program. Then finally, you document conclusions and discuss with your supervisor and team. Okay, so discuss with supervisor and your team. So audit team meeting. So audit team meetings are very important. They may ask you a question on it. Okay, then finally, you send a notification to the taxpayer, and that begins the field work stage. But you can also put it at the pre-audit research stage, because that time you haven't visited, you just sent a notification to the taxpayer. But however, you can include it in the fieldwork stage, is also accepted. Okay, so this is the first part that we are going to look at, okay, because this is very important and it covers the broad area